Okay, I think this is it. So what we're going to do is discuss Title III, and I'm the fill-in moderator, so I did not come with a bunch of pithy questions. So I'm going to do what professors do when they don't prepare their lecture. You turn to the audience and you say, so what questions do we have from our last lecture? And you have 20 minutes of Q&A from your students. So let's start with a quick show of hands. I want to take a poll, gauge the audience. How many of you are excited about Title III launching? How many of you believe it's going to be an unmitigated disaster?
Thanks, Sydney. Thanks for that. Glad you
Okay.
organized us all here to yeah.
That's why the organizers. Okay. 2/3 of the crowd is happy. So I forgot the other question. How many of you are withholding judgment? All right, should have. You can't be both, Sydney. This is DC, but you cannot play both sides, okay? All right. So notice I did not vote on that one. That's professor's prerogative. So let's do a quick introductions down the row, starting, I believe, with Brian, if I remember correctly.
Yes, Brian Castro. I'm the Chief Legal Officer with FundPass. We're a platform as a service that brings crowdfunding to Main Street investors, established businesses, small and middle market companies.
Cynthia Nevels. I'm the founder of thinkcrowdfund.com. We provide investor and issuer education services down in Texas. We also help with marketing strategies for crowdfunding campaign, as well as compliance and transparency.
And I'm Jonathan Wilson. I'm a partner at the Atlanta law firm of Taylor English Duma. I've been in law practice for about 25 years and work with lots of small and medium-sized businesses. I, of course, do a lot of Reg D offerings and looking forward to getting started on more Reg A offerings. And I am withholding judgment as to what Title III crowdfunding is going to do when it finally launches.
My name is Marty Tate. I am a securities lawyer out of Salt Lake City. I have been interested in following crowdfunding. My first sort of crowdfunding client was pre-Jobs Act. It was a peer-to-peer lending company that wanted to do peer-to-peer lending, and that's peer-to-peer payday lending, and that's what got me interested in crowdfunding, and I've been involved in it ever since. And I think I'm actually very excited about Regulation CF and where the role it's going to play.
Hi, my name is Georgia Quinn. I'm the co-founder and CEO of iDisclose, which is a legal technology company that helps entrepreneurs and small businesses prepare their own legal disclosure documents for crowdfunding. So we have an application very similar to TurboTax, where the entrepreneur can go through, answer a series of adaptive questions, and prepare the legal documents required to conduct their offering. I'm also a practicing securities attorney, but don't hold that against me.
You in the room. So before we get into some questions, and I did prepare a couple, I'd like to actually reverse the order and throw it open to the audience first. I just want to take a quick agenda setting. So what are 2 or 3 burning questions or things that you really are not clear about Title III that we can try to resolve in this panel? Or Reg CF, sorry, I gotta switch my language here. Someone has to have something. Mr. Massey. Okay. I think those are poorly understood. I agree. Okay. Anything else?
An issuer who is looking for someone to be their portal, where do they go?
Okay. No other burning questions. Okay. We have an expert audience. Steve and oh, sorry. And by timing, do you mean follow-on financing? Is that what you're referring to?
How many times do you go back to the well?
Okay.
Structured, should they how this financing should be structured, should straight equity, debt, convertible, etc.
Okay. I missed someone. Yes, sir.
Standardization of legal terms, capital raising terms for these and the impact of that on that.
Yes.
I'm curious to know whether small startups that rely on Title III will by necessity scare away venture capital investment for whatever reason.
Okay. So liquid. Yes.
Should investors be self-qualified or vetted through a third
should, or does the law require both?
And foreigners. And how about foreigners?
Foreigners, okay. Hate those Canadians, but okay. All right, we have a good agenda here, so I think rather than, good audience, okay. So I've spent the last 2 weeks talking to 5 of you, securities attorneys, on the marketing restrictions, and I have a 4.5-page document of do's and don'ts you're allowed to do. And unfortunately, most of it is thou shalt not. There's a lot of thou shall not do in marketing. But we have attorneys here, and given the fact that I am not an attorney, I'm going to invite the panel of attorneys to share some of what they understand are the marketing restrictions, and then I'll chime in with my non-expert opinion and maybe clarify some things with the audience. Let's start with that one, because I think that's a really poorly understood component of Title III. So who wants to go first?
I will go first if
Georgia, go for
there's
it.
no objection, because I actually feel pretty strongly about this, and I get a little bit. I mean, maybe it's just because I'm an optimist at heart, but I don't look at these as being overly restrictive. I think it's pretty incredible that you can use absolutely any avenue to discuss a private deal. I mean, in essence, a Regulation CF is a private deal. You're not doing a full-blown IPO. You're not doing a full-blown registration statement. It is an exemption to registration, and yet you can talk about this deal freely using Twitter, Facebook, television, radio, newspaper, absolutely any media out there. Now, yes, there are restrictions, but I don't think those restrictions are really that much different than the material misstatement and omission restrictions you would have in any securities offering that you would do. So what you're able to say are, a brief description about your business, what it is that you do, what you build, make, sell, who your customers are. You can give information about the transaction, the type of securities that you're selling, how much you're offering, how much you're charging. These are all, bits of information that are very important to a potential investor. The requirement, you have to provide a link or information on how to access the full disclosure document on the funding portal. So people are raising concerns that we can't tout how wonderful our deal is. We can't do a video. We can't do this or that. You can't really say that you're the best business in the whole wide world anyway. So I'm not exactly sure why this is some added overly burdensome restriction. There are still requirements that we have on all securities transactions where you have to limit the way you describe your business, the way you talk about the deal. You can't promise certain returns. I mean, you can't promise certain returns in any type of information that you're providing. So it's not just the marketing materials. So I'm actually pretty excited about the new marketing channels and the way that you're going to be able to discuss and talk about these deals. And I think if people really step back and think about what it is that they're wanting to tell investors, I don't think there's a whole heck of a lot more that you're not allowed to tell them.
So I have to play devil's advocate here. This is going to be fun. So Gene, wherever you ran off to. Okay, this is your question. Are you agreeing with her?
No, sir, I don't.
I didn't think so. So let us provide context for your question.
Everybody will agree that on Kickstarter, if you don't have a video that describes your product and tell something about it, that there's like a 70% failure rate for things that don't have a video. So I would think that you would need, in any offering on the internet, some very descriptive material. If you, for example, if you and Elio could only have said, we're selling so many shares, this is the company, this is our tombstone, and you can go to the portal, and the portal can't market it either. Maybe you can show your website or something, but and Sarah has said you can only have a tombstone.
Gene, you can absolutely have a video. In fact, the rules specifically allow for the video about your business on the funding portal site. You just can't go blasting your video all over town. You can send out your email blast that say, hey, check out my video back at www.seedinvest.com or wherever your platform is. But you certainly are allowed to have a video. In fact, there are multiple places in the regs where they say, take the transcript of your video and attach it as Exhibit B to your Form C. So
I can only show it on the portal.
Correct.
So let's talk about the difference between on-portal and off-portal marketing and communication. What's the distinction here in Title III?
So the primary distinction, just to reiterate what George has said, is that anything off-portal is really limited to this tombstone type ad. Now again, I agree with Georgia that it's pretty amazing that You know, you're going to be on your Facebook page, and there's going to be something that can pop up and say, you know, here's who the issuer is. This is their offering. This is a little bit about their business, and click on this link to go invest. I think that's a pretty amazing thing for a private offering, but it is limited to that information. On the portal, you're able to, obviously you provide your Form C, you're able to provide the video as part of that disclosure material. In addition, the intermediary is required to have communication channels, so there can be dialogue back and forth between the company and the investors, between investors themselves, between the crowd. The only limitation there is if you are being paid to get on and promote the offering, which you can. They can pay people to get on the site and say, hey, I think that this widget is the best thing I've ever seen. They have to disclose, by the way, I'm being paid to say that. So that's the primary difference between off portal or off platform and on platform.
Yeah, I think that one of the models, and again, I'm a lawyer, not a marketing guy, but I think of this as the tombstone being sort of like the hook you throw into the water. And if you can get the fish, the investor, to come up onto your boat, the platform, you can fillet the fish, you can roast the fish, you can do whatever you want to do under what the rules say once they're on the platform. But we just need to find creative ways to use those tombstone ads like hooks to get the fish onto the platform. And I think REG CF is going to stand or fall as to how effective we can be at getting the fish to the platform. Because ultimately, you can't have crowdfunding without a crowd. And all those platforms that are out there today, they really don't have much in the way of crowds. We've been talking about crowdfunding for 4 years, but no one's really done one yet. And when we're actually finally able to start doing some, then we're going to see how effective we can be at doing it.
Okay, so the tombstone requires, and please, I'm not a lawyer, name, registered entity, platform you're raising funds on, the amount of the offering, email address, physical location of the business, general description of the business items. I'm trying to go like by memory of the regs here.
It doesn't require.
No,
You're
allows.
allowed.
Excuse me, allows. Wrong terminology. But end of story. So my understanding is like I couldn't say like in Kickstarter, I'm 28% of the way there. First week, we're so excited this campaign's taking off, and can't discuss that, right? Only on the portal.
Yeah, the platform, and the platform could tweet about it, and the platform could say, you know, well, they couldn't probably say the specific deal, but they could say we have deals.
My understanding is the platforms can't, correct, lots of lawyers here, the platforms cannot specifically market one particular issuer and talk about the progress of any particular issuer.
I think that is open to some discussion right now as far as what I think there's been questions given to the SEC about can you show a status bar on
Sebastian
Tombstone?
said no last week.
Yeah. So
Also, is the platform a broker-dealer? Because if the platform is a broker-dealer, they can actually provide investment advice, so.
Gene, are we satisfied? He keeps it.
If I list on a broker-dealer platform for Title III, then the broker can do basically anything?
No, we were just talking about if a broker could promote one deal over another or recommend or give certain investment advice. Certain broker-dealers that are regulated, that have applied to conduct those services for their customers are able to provide those services for their customers, but a funding portal is not able to provide those services.
Doug.
So you said Sebastian said that the status bar is not okay. I had heard through the crowdfunding grapevine the opposite. So
Sam Guzik told me he met with,
and he said yes.
and he told me no. So this is one of those, there are some areas of grayness here.
The rules would make it clear to me that you shouldn't because you're not allowed to talk about any individual deal as a platform.
Right.
But then I was of the understanding, I think we should coordinate and get back to Sam so that there isn't confusion, that notwithstanding what the rules said, the SEC was going to give a little latitude in that area, which was surprising.
Yeah.
So I just think
And
we
also
should
we
go
need,
back to the issue.
yeah, and we need to be clear, are we talking about a blast that is, again, off platform, where they're saying, oh, we have a deal, you know, that's 50% funded, or are we talking about on the platform having a status bar for each deal showing the amount
Or you
complete
API feed
to another news site?
that it's 60% funded.
Like
So I
next gen
think-
crowdfunding, we were told we couldn't do that. Is what we were
If it's
told.
on platform, I'm assuming you can have those bars because you have to submit reports to the SEC. It'll be on Edgar. I mean, that's the other thing to keep in mind. You have to submit your updates on Form CU telling how far along you are in your offering. So that's all going to be public information on Edgar anyway. So when you complete, so when you get to, and you can do it more frequently, but
You're
once
required
you've
on
completed,
completion,
you're
you're
required on completion.
optional up before completion, correct?
So if I may add
Please.
a different spin on this, I'm in agreement and very excited as Georgia, but I'm looking at it from the business's perspective, the issuer's perspective. I serve as a business advisor for the Goldman Sachs 10,000 Small Business Program, and they have companies, mid-sized businesses that are up to $10 million who also may be interested in Reg A for raising capital for growth. A lot of those CEOs and presidents of those companies have no clue what this all means from a technical aspect. They are not connected socially. They don't have really viable CRM systems to really engage a fan base. They are clueless as to what this Reg A means and how it could potentially be a source for access to capital. And so I think that, albeit that the rules are in place and that it's exciting, we have a lot of work to do to educate issuers and small business owners, multi-million-dollar business owners, to help them understand how to use social media, how to be creative enough to express what their products are and describe what they're doing. They don't do that very well, although they may sell well, but they don't do that very well. So there's a lot of opportunity there, but that could slow us down.
Yeah, that's a huge learning curve. We have a lot of topics. So let's jump on. I mean, I think the marketing is a good highlight. There are some nuances that we're still waiting for the SEC to give us specific guidance on a few things. I think the rules are fairly explicit. I suspect we're going to see issuers misbehaving, not in an intentional way, but just the regulations are going to be confusing. So my guess is the SEC is not going to take a lot of enforcement action as much as just dialing people back and saying, you can't do that, and let's slow things down. I don't think they're going to crack the whip as much as they are just going to try to educate some folks. So we had some questions about self-qualification. Jonathan, pick on lawyer in the middle. What do the regs require?
I will pass.
You will pass, okay. My understanding is self-certification is allowed. You don't have to do any sort of investor verification or income verification or that they've exceeded their caps.
Yeah, I think we need to be clear that we're not talking about accredited investor
Not-
verification.
right.
These are all, I mean, you don't have to be an accredited investor, any investor. The only limitations on investment are based on the investor's income. So if they make up to $100,000, then they're limited to 5% of their income or $2,000, whichever is greater. And if they make over that, they are limited to 10% of their income up to $100,000 cap. So those, and they are allowed to self-attest as to their income or net worth level.
Yep. Yes.
Do they have to, is that limited annually or is that per investment?
Great question. Yeah, go Marty.
Annually, it's a rolling 12.
But there's no way of aggregating data, so they're just trusting that the investors, in theory, are not going to put their life savings into 30 of these deals. But there's no reporting to allow the SEC, to the best of my knowledge, to know that any individual has exceeded those caps. Just the IT infrastructure and the cost would have been phenomenal. That was discussed 4 years ago, but that was passed on. Okay.
Professor Richard caught me napping. I actually did know the answer to that question, but I was thinking down another line of analysis. But one of the challenges, though, for making Reg CF a success is that the folks who come to these things and do this stuff all the time know these rules like the back of their hand. But for someone like me who deals with startups all the time, have 3 or 4 different dozen clients working at any given moment, folks come in and say, well, how do I do this? How do I communicate this to my investors? The rules that you describe for self-certification can be quite complicated. And it's not easy to communicate that to an investor, even with the best website, with the best investor education tools. I think it's going to be a while before people internalize those sort of rules the way they have internalized the definition of accredited investor, for example.
Okay. Just going down the list in a random. Thank you, Jonathan. Foreign investors, allowed, not allowed restrictions. Who wants to tackle that?
I can tackle it. Foreign investors are allowed, but the key anytime you take foreign money is you need to make sure that in the home country you are not running afoul of any home country regulations. So, for instance, if you're taking investors from the UK, you need to make sure that you're not running afoul of the FSA in the UK.
So the issuer has to do that, or the platform has to do that?
The onus is on both, but it's the issuer bears primary liability.
So Johnny's Muffin Shop is going to figure out how to coordinate and whether they're so just being practical.
Well, they have to go through a platform, and platforms currently are able to check the IP address of the investor, and they're doing that now for the state-regulated platforms. So right now, for instance, in Texas, they have intrastate crowdfunding, and so they have to make sure that all investors are actually residents of Texas, and so that's currently occurring right now. So we can ask an investor where they are domiciled, and if you get information that they're from another country, you can either refuse to take their funds or you can verify that you're complying with their home country regs.
So is an issuer responsible for KYC, AML, Patriot Act, all of those wonderful issues when we're dealing with international money transfers?
Ultimately, yes, but again, that's going to be taken care of by the platforms because they also share that liability. And so actually, this is a great topic because KYC and AML is now trying to be regulated for funding portals by Treasury, which they arguably have authority to do. And importantly, the way AML KYC works is the burden is on the entity that has the money. So the entity that actually custodies the funds has to conduct the checks. So in this instance, it's the escrow agent. Escrow is the bank. Escrow has to conduct these checks. And they will, and they are. And so the issuer can then rely on those checks because they're basically paying a fee to that escrow agent to conduct this for them.
Okay. Yes, Doug.
That's spot on, obviously, but I think the presumption in this industry ought to be in order to avoid the complexities of international regulations where there will not be a similar exemption, more likely than not to default to don't take any foreign money because you won't have an exemption available in those countries and you will have been deemed to have done a public offering in violation of their rules. Now, the same thing holds true in Reg A Plus and Title II, quite frankly. People are not heeding to that concern. They ought to, because the OSC in Canada or the FSA in the UK are well aware, and when one of their citizens gets burned in a way they're not happy, the SEC is going to hear about it.
Yeah. Okay. I agree with you. I think it's going to be an area where a lot of companies are going to get burned because everyone's just taking the money. My phone's ringing off the hook from China right now. People want to figure out how to play in these markets, but that's going to become very complicated. Okay, we talked about...
There is a technology solution
Yeah,
to
go ahead.
this, and there are certainly providers like FundPass, and that's one reason we're so excited about the potential of REG CF and the other components of the Jobs Act. It's possible with simple APIs and things that are entirely portable to, you mentioned a small baker, I think, that are portable to that bakery's website. Simply cut and paste almost, and you can have a compliant means of turning your customers, some of your best customers, into investors who become even more loyal customers as a result of owning a piece of the action, and taking the burden off of, although ultimately, of course, as was mentioned, the compliance burden is the issuers, but taking off the technical obligations that are inherent in that in a way that we have the technology to do is why this will work.
My background is information technology, so I truly believe that issuers are not going to understand the complexities, and nothing against all the lawyers in the room, but to keep the cost down, technology is going to be a huge driver of this, just to make this market
And it
efficient.
only works if the costs are down,
Right.
and if the regulatory limits or barriers rather are workable.
So we have a lot of insider experts. We have two gentlemen over here that I believe are issuers looking for information. You were asking about how you find a platform, and our implicit in that question is are all platforms created equal, or how does one determine who to work with?
I guess implicit is that is a platform necessarily a portal? I don't think those are equivalent terms.
That's correct. They are not. FundPass is a platform at this point, and portals don't as was mentioned, even custody the funds. Yet FinCEN has issued a notice of proposed rulemaking just last month that would redefine broker-dealer in a way that includes portals, not platforms, but portals, and therefore require all of the bells and whistles of an AML and BSA compliant program be incorporated into the portals operation, which is really a belt and suspenders approach, since escrow agents are already doing that work. I mentioned the notice and comment period is open until June 3rd, and they've only had 3 comments filed.
Really?
Which is a total of something like 6 sentences, I believe. But I think it's critical if crowdfunding is to be to have the success that its potential suggests, that those that are supporters of the concept certainly remain vigilant and let the regulators know what's workable, what's not workable. We've seen with various iterations of rule proposals that came out that we ended up a fairly long way from what was originally proposed in many cases.
I mean, I couldn't name any entities that I know of that are portals right now. Can anybody help me with that?
I mean, the problem there is there are none, because it's not until May 16th that they will go live and be effective. And that was not true. I mean, there actually are a couple now. There have been 2 that have been approved thus far. But right now, we just have a lot of companies with a series of applications that are resting in the hands of the SEC and FINRA, and they're currently working their way through that approval process. There are 2 funds that or 2 portals, apologies, that are currently have been approved. So, just in general, if you're looking how to find a funding portal, Edgar, go to the SEC website and look for approved portals, and you will find them. Now, how to determine a good one versus a bad one, I would probably look to the principals of those portals and see what kind of background they have, see if they've done other deals using other exemptions and been successful in the past. That's how I would do my analysis. And then the other thing to keep in mind is that broker-dealers are allowed to do Title III deals, Regulation CF crowdfunding deals, and they don't have to make a special application. So any broker-dealer, as long as they amend their form that's filed with FINRA, will be able to conduct Title III deals. So if there's a broker-dealer out there that you know of and like working with, you should ask them to work on this transaction with you.
What we've done in the state of Texas as relates to the intrastate crowdfunding regulation, we collaborated with the State Securities Board and 6 of the 8 approved portals in Texas to host town halls across the state to introduce the portals to the issuers, to the audience, to the crowd, to help them get to know them and explain what their niche is and describe how their platform or their portals work, because that's a major question that business owners had is, I don't know who they are and how to use them. So we work to educate the crowd to remove that barrier and bring them to the people so that they could explain it and have their questions answered in person.
Texas has been so forward-thinking in this whole industry. It's been amazing, and I think it's no surprise that the first funding portal approved is a Texas platform.
Which one is that?
Yeah, Nextseed.
They were first. See how much I know. Okay.
And they have been a partner with us from the very beginning.
Yeah.
Okay, awesome. We only have a few more minutes here. So there's a question about structures and standardization of terms and debt versus equity and what's the best deal structure. Joel, go for it.
I just want to add, these are great questions. There's a lot of details, but to me, the most practical issue of all, I don't see a lot of people in this room that have ever raised any capital before. A lot of service providers that have helped out, coaches, but they're not the people on the field getting hit, so forth. I've been raising capital for a long time. The only investors we ever have problems with are the non-accredited investors. From a customer service point of view, the only people who they don't understand, they didn't realize, they're disappointed, $5,000 to some people is a lot of money, and it really matters, and they put the money in, and so I just kind of want to get a sense from the panel and whoever else, if they perceive this is really going to be a big problem. We're not intending to raise money from non-accredited. First of all, because the broker-dealers, the volume is too expensive. The broker-dealers can't really handle it, so that's one thing. But I just wonder if anybody has really given any thought to it, if you have any experience with it, or
How are we going to deal with those messy little investors?
You're right. I mean, is it, in a Reg A deal, I can understand it, because it's visible. But in a Title II deal, investors are kind of in your face, you know, it's a little bit of a different kind of relationship.
I agree with you. I managed a hedge fund. We raised several $100 million, and we somehow had a couple of non-accredited sneak in, and you're right, they were the loudest investors when things went bad. But you know, I had a recent discussion with the state regulator about this very topic, and I'll be curious to see, because I think right now we just don't know, right? We don't know who these investors are going to be on these Reg CF offerings, who these non-accredited investors are going to be, and what their intent is going to be. I actually anticipate, and this is just pure speculation, that a lot of these people are just going to be investing similar to what they would be doing on a rewards base. I don't think they're going to be saying, hey, I'm planning out my retirement fund and I'm going to allocate this much to crowdfunding offerings and this much to mutual funds. I think it's going to be more like, hey, I know this guy, and he's going to Sarah's example. They have a muffin shop, and I really like that, and I want to help support them. And I don't know if there's going to be that, wow, I lost all my money, and I'm upset. It's what happened earlier when they were talking about Elio with.
I don't know if I agree with that. You know, in Kickstarter, you say to somebody, okay, you're going to give me $10, you're going to get a little trinket. In this, you say, okay, give me your money, and our goal is going to be to give you your money back plus more. So the expectation from the very first day is different. So I'm not saying they're running to the SEC and they're going to be yelling and screaming, but how many of these companies are setting up investor relations departments or customer service departments? I mean, this woman just said that these people don't even have Facebook pages or LinkedIn, these companies. They don't have CRM systems, which I know is true. We all know this is true. So I just wonder if they realize what kind of avalanche of potential customer service troubles could be coming their way.
So I could answer that in two ways. Number one, because that's been a major worry that I've had for the last 2 years. That's why I'm focusing on issuers and educating them. But going back to what Joan mentioned before, investor education is extremely important. So what Texas has done is they have, and always have had, a specific portal that is dedicated to investor education. They recently published a book that is specific to investor education and included the new crowdfunding regulation in it and what to be aware of and how to analyze deals as well that we distribute when we're out in the community educating the audience. I believe that the education component is very important, and serving as a leader or a feeder to the portals through our education would help to minimize those challenges that those investors may have. But I also have had conversations with Merrill Lynch and others, financial planners, to talk about what are you guys doing to help your non-accredited investors who may have an interest in this. And as I understand it from the people that I've spoken to, is that they're not doing anything.
Yeah.
They're not necessarily making recommendations, nor are they talking about it or educating their clients about this space right now today. But I think that they could play a vital role in helping minimize those problems.
Okay.
I know.
We need to
yes,
wrap
exactly.
up. Let's continue this over the next coffee break.
Sure.
So I'm just in the interest of time. Yeah.
Do you still, I don't know if they changed the rule or not, do you still become a reporting company, number one, and number two, shares still restricted shares?
Yeah, the shares are restricted shares, and no, you do not automatically become a reporting company.
25 million of assets, is that the test, Doug?
Yeah.
Okay. So let's do
And it's restricted for a year. It's a one year holding period.
Oh, to the 500 non-accredited.
Okay. So quick panel, then we're going to do 10 seconds. What makes you
500
excited?
undercreds.
What makes you excited about Regulation CF? Georgia, you're
Wait,
up.
what was the question?
What makes you excited about Regulation CF? Got to pay attention. Can't do a Jonathan on me. 10 seconds or less.
I got up at 4 a.m. to catch a plane.
I love you, Jonathan. It's okay. We'll get along well. So 10 seconds. What makes you excited? And I'm going to have the last word. You're up, Georgia.
It's a watershed moment for securities law and small business in America. Never before since, really 1933 has a company been able to publicly offer, a small business been able to publicly offer their securities to their investor base, their customers, their clients, people that are, have a passion for what they're doing. And I think it's going to be a really powerful movement, both for investors that are now going to have access to private deals that, before now have been cabined to the country clubs and the back rooms of places like this. And also for companies who will now have access to.
Okay, so you're
this
definitely a
movement.
pro. Okay, Marty.
In the program, I think the first question was, will Title III be a boom or a bust? I don't think it will necessarily be either. I think that it will grow. I think it will, if we have the sort of the same success that we saw with 506C, I think it will be a good thing. It will fill a piece of the capital raising process. I don't think it's going to be a bust, and I definitely don't think it's going to be the next, huge thing.
It's not the Uberification of finance. Okay,
No,
Jonathan.
no. Yeah, I mean, obviously, it's exciting to take a billion internet users and have the ability to pull them together all on one portal to take a look at an opportunity. The challenge is applying 19th century regulatory concepts to 21st century technology and being able to do that in a way that overcomes the educational challenges to let the investors understand what it is they're truly getting into. And if we can balance those challenges, it can be successful. If not, it may just be a detour on the way to something better.
Okay, we'll take it as a neutral vote. Okay, Cynthia.
I'm actually excited about the new job opportunities and the new business opportunities that will be created because of what's happening now. New businesses are going to come on board that will offer services that we've never thought of before and create new jobs in a space that's brand new. And that, to me, that innovation piece is very exciting.
Okay.
Yeah, I'm very bullish on this, and it's been a long time coming, certainly over 4 years since the enactment of the Jobs Act. But this is really going to democratize investing, investments, and access to capital. We know there's demand for more alternative sources of capital. Access to capital is one of the principal problems, if not the principal problem for most SMEs out there. This will open up a new channel to them. At the same time, it'll also open up new opportunities for investment that have been insider deals in the past to Main Street America, and give them an opportunity to make an educated decision about what they want to support, what they want to buy into, and whether it's equity or debt, be a part of something bigger and create jobs and grow the economy.
So being an academic, my answer has to be, I will wait to see what the data says. So, and with that, I am going to turn it over to Sydney. Thank you so much, everyone.